So the last time we talked about Bitcoin, we were looking at a theory that said Bitcoin was going to track a particular money supply, it was going to go down, and it did. It didn't quite hit the thing we predicted. But the thing that we're tracking now is many are saying this is it. This is the beginning of the Bitcoin bull run. And part of what the backstop of what's going on with the rise of the price of Bitcoin from its recent low is that we've got all of this turmoil that exists in the economy. We've got tariffs in the United States. We have a global trade war that's kind of heating up, and Bitcoin is suddenly trading in a way that seems disconnected from other risk assets. And if that ends up being the case, we might be into a situation where we see Bitcoin trading in a similar way to what has been happening with gold. So yeah, let's talk about Bitcoin today, and let's revisit price, because we're at a relative high point here. We're at greater than 90,000, which is a significant place, and there's some news too. So Rusty, you brought something to our attention about Bitcoin. It looks like there's some sort of a hack, and that has also led to a rise in price of another interesting crypto.
Yeah, it looks like overnight or just a few hours ago, there was a significant hack for 3,520 Bitcoin, which comes out to about $330 million. And it looks like the majority of that hacked money was converted into Monero, another coin that has seen a significant rise lately. And Monero, I don't know much about Monero as other people, but I think Monero is more of like a secret coin where it isn't being tracked as much, and you can't really follow it on the blockchain as much as you can some of the other coins. You
Yeah,
guys can correct me if I'm wrong.
yeah, it's a privacy coin. So the point of Monero is to try to have obfuscation and privacy with respect to who is paying who. So there's some mechanisms in place that they've got that make it so that it's really hard to tell who's spending a coin to who. So that is one of its main features, is it's known as a privacy coin.
Very,
Yeah, let
very interesting.
me
And
get this
yes,
pulled
and
up. This is
oh,
no, I was just pulling up that reporting on it. So here we've got Zach XBT talking about this hack, and I mean, I was watching the price of Monero last night because it just was completely going nuts, and it definitely tracked with what this guy was saying. Is we saw it kind of double hump where it had been hanging out here at like $230, and we see that it spiked up to 350, which is just wild. I mean, this is a significant rip for this crypto. There's also been some talk that Monero's been under a consolidation pattern for a really long time, and it was poised for a breakout. So, the fact that it ripped up like this, some have been predicting that this was going to happen to Monero for a while. So, yeah, Bitcoin and Monero are sort of tied together via this event that occurred, or because somebody managed to get their hands on a significant amount of Bitcoin and started swapping it over into Monero to try to hide their tracks.
At some point in the future, we've got to have a full episode and pick your brain, Grant, about Monero, because I know you know a lot about Monero. But turning it back to Bitcoin and where Bitcoin lies in the world of money and finance today. You mentioned Trump's tariffs policies and some of the discombobulation going on in the world economy. And I think that you're right to point out that we should expect to see the price of Bitcoin begin to diverge from the I don't know, the parity of the dollar, the value of the dollar, and other state currencies. And I think we should also begin to ask ourselves, there's a narrative of in the Fed in the United States, and the Federal Reserve is not a central bank. the Federal Reserve is a private bank that has been given a monopoly to be used by the United States Treasury. So as we also have crypto solutions and central bank digital currencies, which aren't popular with regards to social tracking, but are popular whenever you think of some of the other uh, tools that they bring to governments for, either limiting spending or showing where the money is going. Um, I think we're going to both see to see a rise in central banking and also a separation in central banks payment networks and corporate payment networks. And I say that with an eye towards the BRICS versus SWIFT payment channel. It's going to be one that is not relying on the payment networks between banks, between private banks, and instead one that's devoted to these central banks and their settlements. So if that happens, long story short, because I'm wandering around here, if that happens, it would make sense to that corporations would begin to hold something like Bitcoin. Um, and you mentioned also gold. I think it makes much more sense for nation states to hold gold and less so for corporations because of the problems in holding physical gold or other physical aspects. But Bitcoin is an interesting solution for them. So we also saw Jack Mallers, is it Mailer, and the announcement of that Bitcoin bank that they're creating. So
21. Yep. It's a call out to the cap on the number of Bitcoin.
right, and a massive number and a massive investment in the creation of that bank. But I think what some people who are reading financial tea leaves are probably thinking about is banking systems and a financial network that's underpinned by crypto, possibly Monero, possibly other cryptos, but to begin with, at least, very largely going to be all about Bitcoin. And we've also talked about GME and their investment in Bitcoin.
Well, that's an interesting one, actually, because there's controversy about whether GameStop actually bought the Bitcoin. So there are rumors that they might not have purchased it when Bitcoin was in its relative trough. And if they had so, then that would have been a significantly awesome move because they would have bought really low and already seen a gain. But some suspect that they didn't actually purchase any Bitcoin because there are reporting requirements for whatever they invest in. So there are certain scenarios under which GameStop may not yet have actually purchased Bitcoin, and some are saying that they fumbled the bag, that they had this grand opportunity, they raised the money they could have bought, but they didn't. Maybe they watched our show and were waiting for that $70,000 price. I'm not sure.
They probably did. Well, that bummer for GME. They should have bought but I guess they know what's best for them. But I have an idea that we'll see more corporations that begin to move in this direction, and I think the idea of creating this a Bitcoin bank as this 20 what is this called? Oh, 21 Capital. 21 Capital.
Yep, 21 Capital, and they, are planning a purchase, which we know has significance as well, because there was a time where Satoshi was contemplating not having 21 million Bitcoin, but 42 million Bitcoin. So, calling it 21 Capital and buying 42,000 BTC, that's those are all magic numbers there.
And did you happen to look into what they wanted to do with this 21 Capital powerhouse company? What did they have plans apart from buying Bitcoin, or did they go into any more depth on it?
I think it's just kind of buying Bitcoin. If you look at some of the individuals who really like Bitcoin, and Jack Mallers being one of them, I would plant him firmly in the camp of Bitcoin maxis. They don't really have a lot of other things that they tell people to do other than to just buy Bitcoin. So it's actually, some have said this is a little surprising to see him do this, because why create an intermediary? Like, what is the point of having something like 21 Capital when you can just go buy the Bitcoin directly? However, we've discussed that there are certain institutions, ETFs, other types of financial products that are locked in to what they're currently doing with equities. And so it's not always possible for everybody to participate in the way that the Bitcoin maximalists would have preferred, which is everybody to just buy and self-custody Bitcoin. So I think, he may have jumped into this because finally had the right offer, the right opportunity to do something. I haven't heard anything that this is that novel or unique. It doesn't seem that different from any other company that's just buying Bitcoin and holding it as a treasured asset. But they're going to go public with a SPAC, so that's kind of interesting. We haven't seen those special purpose vehicles been used in quite some time. They were very popular for a few years, and we haven't really heard much about them lately. But that's their plan. Is I think they're going to go public with a SPAC, and that vehicle that has been sitting there. Do you know what a SPAC is? Maybe I should describe that.
Would you? Because no, I don't know what a SPAC is. This is the first I've heard of it.
Yeah, so a SPAC is where you have a company and it's already public. So you have a publicly traded company, and its entire purpose in being a publicly traded company is it's going to acquire some other company that wants to be public, but wants to avoid all of the rigmarole that's required in going public. So you take a shell corporation public, and then it holds on to a big treasury, a big pile of cash, and then it purchases something else. And that uses in that vehicle to take this other company public is done via this shell corporation. So there were a whole bunch of companies that did this. I think it was like in the early 2020s, and then it sort of fell out of favor for whatever reason, like probably because a lot fewer companies were going public. But yeah, with Jack Mallers wanting to take this thing public, he's going to do it through one of those SPAC acquisitions.
Interesting. So when I don't know, ramble on about the problems that have been bubbling up in the current world financial system in the wake of Trump's tariffs, have you been tracking the interest rate on treasuries or on American debt, dollar debt, in the
Well,
wake?
I heard it's going up.
Yes, and I am hard pressed to think about why it would go down, and so the part of the reason that I'm wondering if we'll see sort of a bifurcation of I don't know, private sector or global corporation banking and financial systems and state currency systems is, we've had this notion of well, one, the dollar being some long-term stable asset that one could jump back and forth into, but part of that was perpetuated by a growing number of dollars. And if we begin to question, what is the United States producing, and what are other countries of the world producing to back up the growing, the increasing amount of fiat currencies that they're generating for their citizens? Well, why would other players want to jump into that game? And so I think what we are seeing in, again, the nations of the world is turning towards purchasing gold in order to reset what they're holding on to, as to give them something to pass back and forth while they figure out what their debts are against what they're creating. And I think we have been divorced from an understanding of nations' currencies as being valued according to the product, the things that they're actually producing and trading with other countries of the world. We're headed back to that. And the I don't know what to call it, the drama or the saga of Donald Trump's tariff policy with China, and the retribution of China of no longer trading or selling the United States any number of things of rare earths or other products, is going to begin to call into question what the United States actually makes. And again, so when I look at, if I had a corporation that spanned many countries, I would say, what future do I have in getting off of reliance of any one nation state's currency? Because if it's true that politicians can just create any amount of this currency, and that is not necessarily bound to what the production of their country is, then that's a problem. And so where do we have a solution? We have a solution with things that are fixed in the world. And so the fixed amount of Bitcoin and the resiliency of the network and the popularity of it provides an attractive solution.
Well, that is certainly what Jack Mallers and the rest of everybody who is predicting, this massive price shock. I threw it on the screen for just a second. I'm not sure if you saw this, but like this is a report that's coming out that's just recently been updated, where we're in for a major price shock is what is being predicted. And now this is consummate with the dollar losing its place. So I think these predictions need to be tempered by such a thing would be a monumental event across the entire planet. Like we would be in global financial chaos if the dollar sort of goes through a situation like this. But some are predicting that we're well past any point of no return for that, and that gold and Bitcoin are going to be parts of what we see as being the bedrock of the global financial underpinnings. But yeah, Bitcoin is definitely being thrown in the mix by many and saying, this rise. And I don't know if you remember, but we heard last year that many were predicting that a price of $700,000 per coin was not outside the bounds of possibility in 2025. So these predictions have been thrown out there. And if this is the beginning of the bull run, then we should see prices blow past 100K pretty rapidly in this next time period. So it's something to watch out for if you see it sustained above 100,000, because that was the last high that we had. That would be a strong indicator that we're approaching this bull run and that we are actually in it.
I think those who are very bullish on Bitcoin and this corporate system ought to take some caution and ask themselves, what happens whenever there's a financial system that is no longer backed by sovereign countries? And what does it mean to be sovereign? Because a lot of what we say when we talk about sovereignty is an ability to declare you're not going to pay a debt. And I think that is going to be what we begin to see countries doing, or in the case of the United States, creating a bunch of dollars that they use to pay off the debts that they have promised in the past that were denominated in dollars. If you create a whole bunch of these dollars, trillions of them, and that's what you've made a contract for in the past, then you can pay it off. So what would it mean if Bitcoin was worth $1 million, but those $1 million weren't worth as much in Japanese yen or Chinese renminbi or other currency, gold or whatever it may be around the world? So
Yeah, it's a good point. Like, what are you pricing it in? Like, what is it priced relative to? And I think when you look at a lot of the different trading pairs, like if you were to say, what is the Bitcoin gold price comparison? What is the Bitcoin silver comparison? What is the Bitcoin fiat of most other fiats? Bitcoin has been appreciating pretty substantively. So I think it has been holding its own against all others. You're totally right. Like, what does it mean if Bitcoin's worth $1 million? $1 million obviously isn't worth that much anymore in such a scenario. If it's lost its place amongst all other currencies. You're not wrong on that one. So we do need to look at it against a variety of different assets. But these analyses have been done, and Bitcoin has outperformed just about every other asset traditionally. And if it goes to anything like 700,000 this year, it would follow on that same track. So,
well, and I don't mean to. I mean, I'm very interested in the rise of Bitcoin and the rise of global corporations. I also think about our political discussions with regards to Iran and their request or laying on the table in the negotiations with the United States. The they stated that the only sure way to keep America from bombing Iran assets was to have some sort of shared ownership with the world, not just the United States. But they commented that the United States doesn't seem to bomb countries that they have an interest in their oil assets or other resources. So I think this is the case and the expectation for um, a, the growth of global corporations. And there has been also a narrative, especially in the United States, in the last couple of years, but ever since NAFTA and the rise of "quote unquote" globalism, that tracks back to the 40s. But why was it introduced? The designers of the Bretton Woods system, even Maynard Keynes, wanted to change our concepts of money because they thought that those who trade with each other would not fight as much with each other. And I think they're absolutely right about that. So I look forward to a growing independence in the financial system of global corporations. And there are those who talk about, citizens' rights and forgiveness of debts, et cetera, et cetera. I'm also all for that. But I think having two accounting systems for those different sides of the coin is
I see what you did there.
I didn't comment on it, but yes, for those two sides of the coin, but chink, are going to give us more flexibility and stability in the future. And when I say that, I think about Argentina. There was all this narrative of Javier Milei was going to be a great libertarian and free Argentina from its debts, but Argentina, I don't know if you saw this, just took a massive loan from the IMF, and so all of the austerity that Argentina has placed on its citizen has been to go back and pay off the private corporate debt holders of Argentina. And because it was not enough, they've had to turn around and take another massive loan from the IMF. And that's not going to get them out of debt sooner. So if there was a system of independence or sovereignty in Argentina, they could turn around and say, we can't pay that off. You're gonna have to reevaluate our currency. And I also think about I don't know if you remember the euro.
Well, I'm interested in that mechanism if you know, like, because I'm curious when you say you're going to have to revalue our currency. Is that something that they would request the IMF to do, or is that just a function of the market that they would say go ahead and here's what we're planning on doing, let the market decide?
Well, ostensibly, the IMF and the World Bank were created to do that, but instead of doing that, instead of reevaluating the value of these currencies, what we have seen is that they just issue more and more loans, and they become a debt trap, a cycle of more loans to pay it off, more austerity. And so I think again that the creation of the system was correct, but what we need is a truly independent corporate system or private financial system that exists alongside a state fiat currency for one, for the payments between states, but also so that that shared money currency between that the people of a state use can be devalued all at once.
Going back to Jack Mallers in 21 Capital, he was actually talking about one of the reasons that he is so bullish on the price of Chia and what, or not Chia, but on the price of Bitcoin, on why he's so bullish on the price of Bitcoin going up, is that the US is about to go through a cycle of having to roll over and refinance its debt, and that the price on the interest rates has to go up substantially to get people interested in buying this debt and going through another cycle of this. Did you catch up on that, or do you happen to hear it? As that was one of his talking points.
Yes, and I'm not surprised, but as I listen to that, I think, one, he's correct, but we should also be, again, we should be thinking that corporations are going to be asking themselves, what is stable in the future? And if we cannot rely on U.S. treasuries, or also have a problem about physically holding on to gold, and we've talked about the problems of when you're not physically holding on to your gold, the problems that exist in the paper overlays on top of gold and silver, and the problems in the London exchange and the COMEX and the gold exchanges in the world. So if they're not going to be able to physically hold on to something like that, again, I think he's absolutely right to look to Bitcoin as a solution. But when I think about what might be a better metric for measuring it, one, we can think of the growing problems in the dollar, and the looming the looming default, as I don't know, the price of borrowing goes up, and there's also we begin
Well,
to
wait a minute. Hold on. Looming default. I'm not sure about that, because I think they've said this several times. The Fed chairs have come out and said it, and they've had discussions about this. They said there is no situation where the US actually defaults on its debt. They will just print the dollar into oblivion, which will, it will get the US. The US will get out of it, but like the dollar will not survive that.
I mean, when I say looming default, I mean, I think that's exactly what that looks like, because there
Gotcha.
is
So we're not talking about technical default. We're talking about like where they print so many dollars that like they become worth 1/1000th what they are now, or 1/10,000th what they are now, and you would have to take your wheelbarrow to the grocery store to buy a loaf of bread. We're in that hyperinflation kind of scenario.
Well, exactly. Hyperinflation is a good word. And when I talk about default, and as we go into that world, I think that we ought to think about the true measurement of default as being going back on one's word. And the United States has done that in many ways with regards to uh, being the backer of the world currency and the world financial system. We've gone back on our word with regards to sanctions. We have we've gone back on our words with regards to treaties made with other worlds. But when I listen to Jerome Powell, and something that he repeats over and over when summoned to Congress, is that what truly backs money is our word. And that is disturbing to to some people who want to see something physically behind it. But again, even whenever gold is custodied for a certain amount of time, and there are derivative trades going on in smaller time windows within that time, to there's still an assumption that in the future your word will be met. And so again, as we come into what does a sovereign default mean, I think we're going to see a lot of quibbling about what that default actually looks like. But in no certain terms, where if you're printing a bunch of dollars and they're not actually backed up by the product of the United States, and nobody's using the financial system, then I don't know, that's going to look ugly. But anyway,
Well, and one really ugly way that this could play out, so watch for this as something that you might see when something like this occurs. You don't want to be holding dollars when this type of starts to happen, and the exits in blockchain are really small. And this is the thing that I think is missed when people get used to the steady state of crypto, is that it feels like it's liquid, it's really easy to trade and whatever. But when the situations occur where everybody wants to run for the door, there really is a very limited pinch point in every single crypto that exists, and that is that there is limited block space. So if you're trying to get to the exit, there's only so many people who can run to the door, and fees go up precipitously. And it's something that gets forgotten, is that you don't just have time to get out when it's time to get out. And so what I think you're going to see is you're going to see people swapping out of their stables, because this has been the trade in crypto, is that people have traded down to a stable coin when they want to try to take profits. Like, that's the traditional way to take profits when something goes up, is you swap to the stable, wait for the whatever asset that you like goes back down, and then you get back in and you've just increased your positional holdings, which is highly desirable. But in a situation where we're in hyperinflation on the dollar, everybody will be trying to get out of their stables, and that will just look really wild, because you'll see fees just go nuts. So hyperinflation would likely also be coupled with massive fees on just about every chain where people are trying to make moves and get out of their stables and do a variety of different moves in the world of crypto. But I think that would be one of those hallmarks to watch for.
You're 100% right there too, and this is part of the reason for restricting the on ramps and off ramps to crypto. I sometimes think of them as bellows for burning off large amounts of cash or dollars. And also, when you bring up the stable coins too, we need to remember that Tether and Circle are buying U.S. Treasuries whenever they are, or ostensibly buying U.S. Treasuries whenever they are increasing the number of stable coins that they have. So not all stables are the same. But anyway, that's all I have with I don't know, doom and gloom news or exciting news about what we might be looking at in the future. Will definitely it'll be interesting to see if more companies start jumping into Bitcoin and out of treasuries or out of dollars or whatever they are holding. Anything else that you have to add, Grant? I don't have anything else to add.
Nope, I'm watching the price of Bitcoin, watching the price of Monero. We'll keep an eye on it, and we'll see you next time on FOMO.